Hey, it's me again, and I just wanted to remind you to use the speed controls. The speed controls in your video player are here somewhere. There's a little gear. Sometimes I'm a fast talker, sometimes I'm a slow talker, but the only way to make sure I'm a just right talker is to click on the gear and then under playback speed or video speed, something like that, it'll start by like normal or original, but when you click in a drop down, it will give you options that are even slower. So if I'm just too fast for you and you're just like, wow, Dan, you need to chill out, then you can put it at like 0.75 times speed. Me personally, I always watch stuff at 2 times speed, and I understand that that sounds kind of nuts to some people, or at least like squirrels or something like that. Anyway, I hope you enjoy this. Don't forget those speed controls so you can consume all of this content faster than normal. Thanks. Bye. Hey, how's it going? I'm Dan Fredenberg for realestateisascam.com, and this is your Real Estate is a Scam update. Today, I'm joined with Asher Freed, who he's in cost seg. We'll get to that in a minute, but the bigger thing is I want to tie this into coaching. If you've checked out Real Estate is a Scam on Amazon, you know that it's really about the things that coaches often they just don't have the attention to detail to emphasize, and it could cost you your real estate business. That really scares me. And this one, it's not so much in that category so much as they say that there are certain advantages for taking certain actions to really get the best value out of real estate. One of them has to be the tax advantages. They talk about depreciation. They talk about forced depreciation. They talk about the depreciation that's a bonus depreciation against all of the different parts of the asset that are falling apart, doing those different studies and all that sort of stuff. But the problem is you can't actually just go ahead and deduct that unless you read the fine print. And that's something that Asher focuses on. But before we get too excited about the business side, Asher, do you want to introduce yourself to the audience?
Hey audience, what's going on? I'm pumped up to be with Dan today, and the truth is, every time I hang out with Dan, it's amazing. So today is no different. Um, I'm with Madison Specs. We do course segregation, but more than just course segregation is that we help people use the depreciation to its max benefit by informing them about the qualifications on how to do that, and not just giving, like what Dan says, a very vague overall description, how it works for some people. We want to make sure that the people we're serving get the best benefit out of what we're doing for them.
I love it. I love it. And I know that generally when you go through the mentorship program, and I guess I really have to go back to that story and coaching in general and where I came from, what gives me the right to even, like cast aspersions about them or whatnot. And I came into the real estate industry through the coaching side. And the way that I did that is I was the behind the scenes guy. I wasn't getting all the attention. I wasn't the person whose video was getting the gazillion clicks and millions of dollars in revenue each year. So I was just making sure that all the CRM funnels, the attribution of affiliates and all that kind of stuff was running without a hitch. And so I feel like I got a behind the scenes look at the scarcity that coaches create, because if you're getting into this industry, people are going to volunteer to show you the ropes, and you're going to realize that part of the reason why they're doing it is because they're hoping that they're going to get a piece of your deal once you actually have one in hand. And maybe you find that to be a little bit self-serving, maybe you don't. But the fact is, like, what's the difference from working with these high performers and the people who are willing to volunteer? So finding out that answer, finding out like what does it mean if somebody's actually doing the deals? What are the things that they're complaining about their competition, who basically they read a book and then they started teaching, or maybe they read a book and they did like one deal and they started teaching, like it's kind of a scary prospect as a whole. But that real estate professional status, I think that's one of the biggest ones that coaches gloss over. And the thing that's even worse about that situation is I think they generally say, talk to your CPA, talk to your CPA, talk to your CPA. And when you actually get past the coaching world and into the investing world, into the syndication world, you find the limits of just saying, ask a CPA. I know I think Mauricio Raoul. He likes to say that if you ask four CPAs, you'll get five different answers. And so maybe the CPA isn't the best person to talk to. So that's why I wanted to have you on this realestateisascam.com update. So Asher, take it away. Where do you want to take it on that topic of real estate professional status?
Yeah, the real estate professional status, which really unlocks the power of depreciation and allows it to, offset all of your income tax and your spouse's income tax, has very rigid rules, and for good reason, right? These rules weren't always in effect. They were placed there on purpose to put a cap on people taking advantage of the real estate world to offset taxes, right? Before these rules were put in place, anyone who made $1 million just purchased up rentals and depreciated it and wasn't paying any taxes. So Congress wanted to go ahead and cap it off. So they went ahead and put in the first, they for the sake of brevity, they went ahead and they capped it off for most people, and they allowed only people who actually work in real estate to be able to take full advantage, because for them it is a business. So you have all these rules, these qualifications. It's highly audited because the IRS knows people are claiming this because they're following these gurus, because they just see the massive amount of savings there's to have over here. So people are just checking the box and cashing in and not paying taxes for years, only to get audited down the line and literally lose their pants, right? They literally have to pay back all the taxes plus penalties. So it's really, really important that if you are going to go ahead and cash in on these tax savings and these tax incentives, just to do it right, to know what you're getting yourself into and make sure to do it right. So you have the real estate professional status. Basically, we want to just make sure that the people who are taking these losses off of their real estate and offsetting their income are actually in real estate. That is the agenda of the IRS. So how do they qualify you to make sure? So here are the numbers, and don't get lost because we're going to go ahead and use a case example so it's not just abstract,
Right,
right?
right. Or I could edit in pictures of cats intermittently. Maybe that'll keep people entertained. Let me know
Exactly.
in the chat, but please
Yeah.
continue.
Yeah, because and part of the reason why these rules are so complex is because it's so abstract. You sort of get lost in like the numbers and the abstractivity of it all. So I'll run through the numbers quickly, and then we'll go ahead and we'll use someone to, to use that for a case example. So the rules are like this: 750 hours in a real trade or business. There's 11 different qualifying activities. Um, they're very vague. I don't know if it's on purpose or not, but at the end of the day, there are areas that are black that for sure count towards your hours. The areas that for sure do not count, and then there's a lot of space in between. So you have 750 hours. You also have to spend more time in real estate than you do in any of your other businesses. So if you are a full-time W employee and spending 750 hours in real estate, not going to count. You have to spend more time in the real estate than you do in your other jobs. Plus, on top of that, you have to materially participate in a specific property to unlock the benefits of being a real estate professional. In all businesses, this applies, material participation. If you have a business, you want that income to be counted as active, those losses to be counted as active. And what that means is that if your business loses money, so you could count it against your income. And let's say you're making $100,000 in business A and business B loses $100,000. So you had a net profit of $0. But that's only going to work if you materially participate in both of those businesses. If you materially participate, you are active in business A, and business B, you take a passive role, you just give them money and you own a percentage. If that business takes a loss, you cannot weigh it against your active business. There's active and then there's passive. Now, real estate is safeguarded as,
Thanks for
as a
clarifying.
as a passive activity, which means that even if you shoot it with a material participation bullet and try to turn it into materially an active business, the rules of 750 hours and 50% time spent in this business more than any other business safeguards and it makes it invincible from turning it into an active business. Only once you qualify for those things can you go for reps, can you go ahead and get the opportunity to turn it into an active business just like every other business. Any questions, Dan, so far?
Yeah, that's really fantastic. And of course, I have a ton of them that are self-serving because, of course, I've been in real estate. I've been paying my bills with money that came from real estate transactions and real estate coaching since 2014. And so, because of that, it's a kind of a funny line on where does it actually start. Like I know that attending uh, property management meetings, in other words, with the asset management team, like that clearly checks that box. Engaging with other people in the business, networking, finding more people to get involved in your syndications. It makes sense that that works. But the main thing that I want to do too is that if the chat is blowing up with, oh, Dan, you're being so mean with your spicy takes on what syndicators do or what they know or what they're saying or not doing, I want to clarify one thing. And to do that, I'm going to bring up the Dan Does Deals Commercial Core Competency Cube for a second here, because it has the 6 different roles as I define them in a commercial real estate deal. And the reason why I do that is because I think I have to answer this question for a lot of people. If they're going to have any success in commercial real estate at all, they're going to need to explain, why don't you know more about commercial real estate or the building, the asset you're raising for? Like, why? Like that's the problem. This is a lot of people, like, after they've finished one type of career, they switch over to real estate, and then they're kind of new to it. And I don't want to contribute to people's imposter syndrome or something like that. That's definitely not the idea. But I want to answer the question, why can't you get a straight answer of, how do I make sure that I'm a professional real estate, real estate professional status? And I just want to go through these 6 sides of the die and just rapid pace, not as long as on dandoesdeals.com, the chance encounters, but a repositioner is an acquisitions person, an operator is a person who runs it day to day. A contractor is, way more often it's a third party. Some people have been trying to include contractors in on their deals, but then contractors tend to know that if they come up short in their part of the operating agreement, then there's not a whole lot of repercussions. So a lot of people are saying, I'm not so sure if you really want them to be on the GP team, but a value add might be part of the plan. Then, of course, there's the boots on the ground, which we've seen in Texas in 2023. We had some businesses go under because they failed to have a local. But of course, the repositioners have to have a vast financier network, just people who are not on a GP team, and they're purely lenders, because if you have a more advantageous loan, that's upside for the acquisition. But the other thing that I parse out, which is vetting, and that's what I'm tying into the cost seg part that you do, and this just knowing accurate, up-to-date information, niching down on the real estate professional status part. Some people, when they are actually repositioners, they might try to pose as if they are the sponsor or the KP on the deal, which is somebody who already owns a similar asset and therefore is one of the key components in being eligible for a commercial loan. So that's how I vet people. And if you go to dandoesdeals.com, you can get a copy of this die for free and print it out. And I don't even ask for your email address because it's such a dummy move. But anyway, Asher, so that's how I see my answer back to, it's like, well, why doesn't my coach know this? Why wasn't somebody up front? Because I think a lot of people, when they get into commercial real estate investment, they get that information about real estate professional status too late. So about that, like, obviously people need to get in touch with you. Me, I'm easy to get a hold of, Dan Fredenberg. LinkedIn is the best platform to do that. You can get lots of videos like this on realestateisascam.com, where I show lots of ways where you could lose your shirt with no idiotic mistakes whatsoever and walk away thinking, you know what, real estate is a scam. And then I say, well, but this is what full-timers do to make sure they don't fall victim to that. But if you scan the code on your screen, that goes to the FAQ FAQs page of 506 Beanie, which is the platform I offer to document your substantive relations. So if the SEC audits you and says, how do you know these investors? Did you just walk up to them and say, hey, want to buy a deal? Anyway, Asher. So, as far as people reaching out, just so we get that out of the way, how should people reach out to get the most up to date information? Who can they follow? You have a podcast, I believe.
I have a podcast. It's called, now write this down, the Real Estate Professional Status Podcast. You could subscribe. That would be great. I just interviewed an ex-IRS agent. I just published the podcast. We get down and dirty with the details to make sure we uncover everything. You could also connect with me on LinkedIn, Facebook. You can send me an email at afreed@madisoncrest.com. I also have a free, simple guide to show you the benefits of real estate professional status and how you could qualify for it. Just a basic overview to get a good idea on how you could do that.
And realestateisascam.com has the brand new book, which is what you should have. You should have the book. And what's the book all about? Real estate's a scam? Well, it's my biggest thing is taking aim at coaches who teach people how to do illegal real estate transactions, because that pissed me right off when I learned about it. And the other thing too is the different securities acts that basically mean if you're poor, then you're going to have to meet a bunch of lawyers and get really, really lucky just to make sure you're not breaking the law by raising money. Anyway, so I hope you check it out. And I've been hanging out a lot with people, like 8-figure net worth and upwards. And one of the things that really comes out is just making sure that you've got those details buttoned up sooner, because it's like the other thing I got to emphasize too is that between regular folks and the people with the 8-figure net worth and up, one of the biggest or more commonalities really is everybody thinks they're broke. Everybody thinks they don't have enough money. And when you really dig into these tax abatement strategies, basically actually being able to take advantage of depreciation and things like that. That's what basically proves to people that they can actually afford these investments. And that just sounds stupid. I know that, like, when you're a 20 something and you say it's like, okay, minimum investment is $50,000, it's like your eyes pop out of your head. And then, then suddenly, $100,000 doesn't seem like that big of a deal. And then $200,000, like, it all changes as you get older, even as those dips go, and you just realize you have to do more with it. And so very often people have 401k money that they have to figure out how to deploy into something that they have more control over and is really worth putting your eggs in that basket, or at least some of them anyway. So I think that's really fantastic stuff. Have I got that about right in your, like I got like one spicy bit about cost segregation that we can talk about as well, but is that how you categorize the real benefits of what you do, is making sure people can find those extra dollars to make sure that later in life they're not worrying where their next buck is coming from?
Right. So, what we do is with cost segregation is that we'll allow you to take, for those that don't understand, what even is depreciation. You basically are, front loading the depreciation from the property that you take over 27 and a half years. So a lot of people like say, but then I don't get it later down the line. So with this cost seg strategy, what you're going to do is you're going to do compounding tax-free money, or tax-deferred money, which is you're going to take those early tax savings, which is like sort of the opposite of a 401k. A 401k is money that, on a 401k, depending on what kind of 401k, if you have a Roth IRA, I'm sorry, I'm getting involved in IRAs now. But anyways, you get the money tax-free early on. You're going to have to pay the money when you sell the property, but if you 1031, you could pass that on. But even if you sell the property without a 1031, you could go ahead and take that tax dollars that you saved, roll into another deal, and build up that portfolio. This way, by the time you have to pay it back, you have a lot more real estate that you were able to build with having that capital up front. So,
Mhm.
so it's about, because what you said about having money later on, this is one of the concerns people have about doing depreciation is about having to give that back up later in life. But the answer is if you strategize correctly, you should have a lot more capital from those savings. And when you do have to pay it back, that loan, that free interest loan, basically, that you were able to take, went ahead and bought you, a couple of properties before you had to pay it back. Um, that's the cost seg depreciation aspect. Yeah.
Yeah, yeah, I love that you put it that way because the one thing that retirees tend to run into is they become more aware of the ratcheting up of tax brackets, and so as time goes by, that might not go up really in pace with cost of living, and so as a result, putting off your taxes until your retirement age, and then putting through, taking those distributions out of it after your retirement, you might be putting yourself in a higher tax bracket in the future, and the savings are completely eliminated, or at least that's the problem that I've heard before. And so that's why I think it's absolutely pivotal that you understand this stuff and you do it before you make your first investment. Find out, it's like, is there a way that you can get that status quickly? I've been actually thinking that I want to do a little bit of a series of how to make your deadbeat spouse profitable. And this is how it's like, get them to hang out on these Zoom meetings and make sure they do this little selfie, the little screen capture with all the people, so you look like you're in the Brady Bunch. And then that way you can tell, the IRS, see, look, I'm talking about real estate deals and I'm putting in that time, right?
Right, right, right. So to mention about the activities that you had mentioned that count, um, investor hours are actually something that sort of mostly does not count, and it could count in certain situations. But you know, cases that are black and white, I always like tell my clients that you got to look at it as this. They want legitimate people to be getting this. So you have to be doing legitimate stuff. When you're just trying to qualify just for the tax purposes and not, trying to actually implement it. I just, remembered a George Costanza line about lying, right? But which basically puts this into picture that you wanna actually not just check off the boxes, but I'm a real estate professional. What would I be doing if I was really in real estate? And then those do those activities, right? Because it's an episode in Seinfeld where I think Jerry Seinfeld had to take a lie detecting test about not watching a certain show. And he was very nervous and he was trying to get wisdom and advice from George on how to do it because nobody lies better than George because his whole life is just one big lie, right? So, so I think the wise words from George, it's only a lie if you believe it is. Something along those lines, right? Because if you really think that you're saying the truth, so then, your body will respond the same way. So if, sort of carrying that over here, that if you really act like a real estate professional, and do the things that people who are in real estate do, you won't go ahead and have a hard time qualifying.
Mhm.
But which is why I like to work with people that have actually experience in real estate and
Right.
know what to do and are not starting from scratch. But that would be a great series with turning your deadbeat spouse into a tax saving bank.
Right.
Um, that would be great.
Exactly. They
Yeah.
got to be good. That way you cannot call them good for nothing anymore. And of course, like, just for the record, my wife, she totally, is financially independent on her own of me, and she's wonderful. I just want to emphasize that. So I'm not saying my spouse is a deadbeat, but in the off chance that you have a spouse that's a deadbeat, if you can magically turn them into a real estate professional, then those depreciation on paper losses can actually start going against your active income, and
Oh
that's the
yeah.
good stuff
Oh
all
yeah. And someone
day,
said they did
every
not
day.
realize how much the rep status was helping them. I mean,
Right,
once they saw it,
right.
like they didn't know how much it could help them until they actually saw their returns. Like $0 in taxes.
Right.
Potentially that could be the case.
Right. And it doesn't matter if you're a physician, a surgeon, an attorney. Like if you look at your tax bill, I'm confident that it's the biggest bill you have, even over and above your malpractice insurance. It's probably even more than your staff, it would be my guess. It's the biggest bill anybody has. So, it's do what the government wants so you get what you need, and that is investing in real estate. And I think
Exactly.
that it's a wonderful thing because it gets more power out of Wall Street, and that's what I really like about it. Even though they're ultimately doing the loans and getting their piece anyway.
Right, right. But on this point, I was speaking to a doctor just yesterday. He told me he doesn't want to work. Why should he work? His tax bill is so large
Yeah,
that he just rather not work. Like he literally
yeah.
said this, and we're actually working on a strategy how he could maybe take a sabbatical, and because he has a wife that stay at home, but she doesn't want to do it. So we're working on other strategies.
Right.
But uh, but yeah, it's
Well,
crazy.
that's the problem with doctors. You can give them suggestions, like maybe you could start dealing drugs, but they're already doing that.
They're doing that, but the problem
Yeah,
is the
yeah,
drugs
and
are
over
super
where I
expensive.
live, only the government's allowed to deal drugs anyway. So,
That's right, of
but
course.
that's fantastic stuff. Yeah, it's amazing to find that extra money in your existing activities where it's not causing you to tighten your belt any further. It's just basically reallocating your time and your retirement savings in a different direction. And the whole point is not to get people to get involved with any one particular person. Most people wouldn't just go ahead and invest with me over just some podcasts that they'd seen. And I have a system in place to ensure that you wouldn't be able to anyway, because the second you send me your deal, I know that you're not compliant. So fun stuff. All
Right.
right, Asher. I don't know if you have any other parting words. Definitely do check out that podcast. Make sure you've got your head around all of the details about becoming a real estate professional status individual. But anything else for the crowd before we bid them adieu?
No, that's it. I mean, we touched on it very little. There's a lot of information that, to dive into. So check out the podcast. And if you have any specific question, I'd be glad to answer. Your CPA should know a lot of this stuff. Unfortunately, a lot of CPAs don't. But at the end of the day, you always gotta bring over the information even that I give you and check with your CPA to make sure that they're okay with it. Because like what you said, you ask four CPAs, you get five different answers. So you want to be going along with what your CPA is telling you, unless you're like, wow, you're really off. Let me find a new CPA and
Mhm,
then go with what they're telling you. So
mhm, mhm.
that's it. Yeah.
All right. All right. I love it. And yeah, I think part of it is just one basic workflow, right? Which is a professional finds a solution, they're not always going to run to their CPA and say, "Hey, I found out the magic answer today and it is this." What's more likely is they're going to be put in a direction, and the client might find out it's completely the wrong direction and just never bother to share
Exactly.
for one reason or the other. So there's not a positive force in them
Yeah.
being up to date on that. But before we leave, I have a public service announcement. It's my public service announcement. If you've been watching one of my videos at any time, I'm confident if you've been experiencing searing pains in your eyeballs and migraine like symptoms, I'm confident it's because of the hideous subscribe button that should be down there somewhere. And the cure, to my knowledge, I'm not a doctor, I'm not a financial advisor or a lawyer or anything like that, but it's the subscribe button that's down there, and if you click it, it just goes away. And I want as many people to click on it as possible, because if they do, then YouTube might actually start paying for these videos instead of me. And I think that would be amazing. But quite frankly, I should let you know the trade offs. My videos may show up on your list of suggestions. You can feel free to ignore those suggestions, because frankly, I just appreciate the fact that you spent this time with me. Just like Asher, thanks for joining me again. This has been great.
Been real. Damn.
Awesome. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Fredenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B Me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B Me, everybody.